Well, hello and welcome back to the third episode of the StoneX Cattle and Beef Market Report. Each fortnight, we'll discuss and look at the key dynamics, drivers and trends of the Australian cattle and beef market, ensuring that as you, as a listener, stay up to date with the details and insights to inform decision making. My name is Ripley Atkinson, the Australian Livestock and Commodities Manager for StoneX, based in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivative trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. This week, we've had a wave of data come through the ABS slaughter and production numbers for quarter four, and also the MLA and Alpha Q4 24 feedlot briefs. So a little bit to get through, but providing us some really good information and insights on 2024 as a whole. I'll start with the ABS data. There's a couple of things to take away from it. There's obviously the detail in the numbers, but I think the two key aspects that are most important is the processing throughput and the processing fraternity of the beef sector in Australia has put to bed any concerns about its ability to handle these increasing slaughter-ready cattle numbers. So last year's slaughter got to 8.3 million. It was an increase of 1.23 million, 1.23 million or 18% on the 23 volumes. So that's a fairly significant increase. And if you look at it compared to 2022, which is where we killed sort of 5.8.5 million head, that 5.8.5 million was the lowest slaughter result we'd had in 38 years. And we've now come to 2024. The growth there represents an increase of 42%, or nearly 2.5 million head of cattle in the space of just 2 years. So I think the processor's ability to handle these higher numbers and the data reflects and support that. And I think that's a really key aspect to take away. Secondly, it's a combination of factors, but it's the investment producers have made in genetics and that outlay of cost to improve their genetic herd over the rebuild. We're starting to see that come to fruition, coupled with their improving sort of land and operational management capacity and the way they're looking after their land or utilising their land, whether that be opening up space through improved water points or improved pastures or a number of different factors. That, coupled with the genetic improvement and the increase in number of cattle we're putting on feed or we're turning out of feedlots, is combining to see record beef production, despite the fact that we killed 922,000 head of cattle less than the previous production high, which was 2014. So just think about that. We've killed 922,000 head less of cattle, but we reached a new production record. That's all based on those three factors I just mentioned of genetic improvement, operational and land management improvement, and increasing grain-fed numbers to deliver heavier carcass weights. And they're the two key factors which I think really solidify how 2024 performed. And I think they're the main points to take away collectively between the ABS data and also the lot feeding brief. Looking into the numbers and some of the specifics, quarter four 24 numbers, slaughter, total national slaughter volumes for that matter, they were in the 83rd percentile for the quarterly figures in the past 10 years. I think that really indicates that we are moving back towards these cyclical highs in slaughter numbers. We're not there yet, but we're certainly well on the way. When you look at the longer term performance, Q4 last year, since records began, was in the 90th percentile. So we're really pushing the envelope, if you will, in terms of how many numbers we're putting through the processing plants. And I think it's a really good reflection of their ability to recover post the rebuild and COVID to really ramp up production. Looking at some state-based figures, there was some real highlights. Victoria's a theme across both the production numbers and slaughter, but isolating Victoria, it was up 27%, or nearly 390,000 head year on year for its total kill numbers. It's a pretty amazing turnaround for Vic to see this increase to where it's gotten to last year, considering how heavily affected Victoria was, and particularly those sort of metropolitan abattoirs around around Melbourne during the lockdown and COVID. They were pretty heavily affected. But I think the increase in numbers there is a reflection of the recovery they've made, and obviously drawing a lot of cattle domestically from within their own state. But that increase in throughput by nearly 400,000 head year on year, we've got to remember there was a lot of cattle that the Vic processors drew from north of the border with New South Wales into Queensland, and also out of the Territory and South Australia. So they drew from a pretty wide base, and that's obviously contributed to such a significant increase, but it also reflects the recovery that the processing sector's made post-COVID and the rebuild. Looking at the major state of Queensland, numbers up by 500,000 head, or 16%. And as a total, the Queensland figures were the highest since the 19 drought. New South Wales numbers also the highest since the 19 drought. But another state which I think really deserves note or recognition, South Australia. So its kill figures were up 56%, or 110,000 head on 2023 calendar year volumes, and that was the highest since 2017. Now, for those of you aware, we know in early 2018, the processing plant of Thomas Food International's burnt to the ground. We're now looking at these South Australian figures, and you can see that South Australian processing sector is recovering as the Murray Bridge plant begins to scale up its production numbers. And I think we'll continue to see that in 2025, and we'll continue to see higher output from the state of South Australia as that Murray Bridge plant begins to really get rolling. So that's a fairly significant increase, and you can see how much the fire and the damage of removing that plant of TFI has had on the broader sort of output numbers of South Australia. And I think when you look at the charts and how numbers are moving and the data, you can see SA is very much on the way back towards those sort of pre-2018 figures, which is really promising, because it's also become, we're seeing a lot of grain-fed cattle turned off South Australian feedlots, and the feedlots are quite full in South Australia. They're going to need that processing capacity to handle that continuous flow of cattle coming at them. As I mentioned right at the start, the slaughter data really just tells you two key things. The processors are handling this higher number of slaughter-ready cattle, and that's a product of the growth in the herd. So the herd's grown substantially, in the past 4 to 5 years, and the processors are aware of that, and they're keeping pace with these higher numbers of slaughter-ready cattle. So that data and those slaughter figures are a real testament to the processing sector's ability to handle the numbers. Yes, admittedly, margins are pretty solid at the minute, and they're doing quite well with the international landscape and obviously the input price of cattle here in Australia, and that's working out in everyone's favour because the processors are keeping up with these higher numbers. Moving on to the grain-fed kill. Now, last year, grain-fed kill numbers reached a new record. They surpassed 2019. Now, 2019, our grain-fed slaughter was just over 3 million. We beat that by about 100,000 head, a bit less. But the difference between the 2019 year, which was the previous high, if you will, that was the drought. And the feedlots played a major role in helping the beef industry and the broader sector, particularly the producer, and get through that because they had the space to handle those cattle numbers. Now, 2024, yes, southern areas of the country have dealt with drought last year, but we're not in that widespread drought we were, what are we now, 5 years ago. So I think that's a really important thing to highlight. And you can see that, yes, those kill numbers have increased, but we're not in that same widespread liquidation scale that we had in 19. So we're actually moving our whole business model and our whole supply chain model more centric towards that grain-fed system. And I think that's something the drought changed. I think following the drought and that clean out of numbers and reduction in herd sizes on farm, I think it allowed particularly the producer end, to sort of reset itself and become more specialized in the way it operates along the supply chain or the end market it chooses to target. And I think the drought and the results of those changes producers decided to make, we're starting to see, like 3.15 million grain-fed turn-off last year, a new high, but we weren't in the genuine widespread liquidation that we were a few years ago. And admittedly, yes, the Victorian South Australian grain-fed sector is big, but when you combine New South Wales and Queensland, they dominate, and we weren't in that widespread challenging period we were, but we've still got those high turn-off numbers. And I really think that the drought changed that and became people more focused on end markets. And I think that feeder steer centric end market producers are now targeting is a product of these high numbers we're seeing go through or turned out of feedlots. Looking at carcass weights and production, as I mentioned right at the start, that there's three key things to this production reaching new highs, but we killed nearly 1 million head less of cattle. It's the genetic investment or outlay producers have made in their herds during the rebuild. It's the improved land and operational management, so you can either carry more cattle or, through sowing a pasture or grasses or oats for that matter, that producers might not have utilised those management methods they might not have utilised before. Those two things coupled with the high grain-fed turn-off or pushing numbers into feedlots, we are looking to feed cattle for longer, which lends itself to heavier carcass weights. Those combination of factors are really the driver behind this production high. Now, carcass weights themselves, they're 33 kilos a head or 12% higher than the previous production high set in 2014. 2014, we killed 9.25 million head of cattle and average carcass weights were 275 kilos. Now, you can see the difference simply between the 310 kilo average carcass weight for 24 compared to that 276. That significant, that 33 kilo difference, is a combination of those factors. And it's really evidence to how much of a contributor and driver that makes to the total beef, production output, if you will. Carcass weights last year were down about 5 kilos on 2023. I put that down a lot to the challenge Southern Australia and, Vic, Southern New South Wales, SA, Southwestern WA had with its season. Last year was obviously particularly bad for them, and that's reduced the average carcass weights or turn-off weights. The other factor to remember there as well is we killed a lot more females last year than we did in 2023. So that female kill, naturally they're a lighter carcass weight, and that weighs on the overall sort of average carcass weight output, if you will. But that grain-fed sector, it's difficult to measure, but there's no question it's offsetting the situation in Vic. Offsetting the grass-fed turn-off. The last thing I think worth mentioning, or actually just while I'm on that, Vic had its highest production year on record, but its slaughter numbers weren't that high. Again, or its slaughter numbers weren't records. Again, it's a product of that increase in carcass weights and the contribution it's having to the broader sector. Now, I think the other thing I wanted to mention while we're talking feedlots and carcass weights and what that all means, something I'm sort of keeping a pretty close eye on this year is the potential flip or move from for the feedlots back towards shorter fed programs. Now, we know there's been a lot of discussion in the media, and the industry is generally aware of it. The challenge the premium and long fed markets have had, a lot of our major export markets are economically challenged, and, talking particularly North Asia, South Korea, Japan, China, are finding their economic conditions particularly difficult, and that's weighing on trading performance and price performance of those long-fed, Angus cattle, and then obviously into the Wagyu space as well. That brings me to this situation where I can foresee feedlots trading back down into these shorter fed programs, the 100-day cattle, to focus on them for higher turnover. Now, we know with the way grain prices were following harvest last year, not exactly dear. They were a sight better for the feedlots than what they were in 2023, back to $350 for feed wheat delivered downs. That's a significant, obviously, improvement and eases a lot of margin pressure or lifts margin opportunity for those feedlots. The 100-day cattle, obviously, you can do three turns of those, 3.5 turns of those within a year. Some of your long-fed cattle, really long-fed Angus or Wags, you might only get 1 turn, 1.5 maybe. What I think we're going to see there is the demand from the consumer as it trades down out of a premium product because it's economically challenged and inflation and cost of living is an issue. You may see those signals push back to the feedlots, and the feedlots choose to clean out the longer fed cattle once they finish their programs and look more towards the shorter fed programs. Now, this may be difficult to measure, but I think the way we'll be able to measure it to see is turn off the further we get into the second half of this year, and you'll be able to see whether that's happening as those turn off rates outperform last year. That will justify that trend may be occurring, and then anecdotal evidence as well. So something I'm keeping an eye on. That's all for this week. Next time we're going to get back to the markets. It's been a pretty busy start with the release of the StoneX cattle market outlook for 25, and then obviously these two we've spoken on today. So we're going to get back to markets. There's plenty happening there, and looking forwards to chatting with you all. Feel free to share this with a friend. Looking forwards to any questions people have got. If this has raised any, send me an email at ripley.atkinson@stonex.com. More than happy to answer them in an episode. Just email me or record a voice note of yourself and where you're from and the question, and we'll answer it next time. Thanks again for today, and look forward to getting back in touch with everyone in a fortnight's time. Cheers.